Gentlemen, boys and girls, welcome back to VA Universe. I'm your humble host, Victor, bringing to you another amazing video. But before we proceed, can I have you to press on the red subscribe button and smash on the bell notification to be notified anytime I upload a new video? Today's video is for educational and entertainment purpose only. So due diligence must be taken before investing in the stock market. Why? Because the stock market is very risky. You don't want to take that chances. Be educated, know about stocks before getting into the stock market. Let's talk about AMC. AMC, it's in the entertainment industry, ticker symbol AMC. We're also going to talk about Blackberry, software IT industry, ticker symbol BB. These are considered as meme stocks. They actually move hand in hand. They have the same momentum. As a matter of fact, sometimes they have the same volume because if Blackberry is going down, guess what? AMC is also going down. That's what we're going to talk about today. So first, we're going to talk about what's going on in the news. Tuesday, Wednesday, Thursday, we saw some hype. It was bearish, and then it goes, bullish, and then it goes bearish again. So we're going to talk about that, why the hype. We'll look into that. We're also going to talk about what are meme stocks. Don't you want to know what are meme stocks? We're also going to talk about short squeeze, what the hedge funds are doing and what retail investor like me and you, what we are doing. It's going to be a lot of fun. We will also do a technical analysis. So we'll look at the charts. We'll probably look at the moving average, most especially the Bollinger Band to see how it squeezes. So we'll look at that chart and do an analysis and see why it went up and why, it's coming back down. So sit around, sit down, relax, don't move. You're probably going to like what I got for you. Let's go. My YouTube analytics shows that over 75% of my viewers are not subscribed to my channel yet. So please press on the red juicy subscribe button and smash the bell icon to be notified anytime I upload a new video. See, and Blackberry, it's not a trend. It's nothing similar to what was going on with Nikola or Hyliion, the SPAC, special purpose accusation, which boomed. It was a trend last year, coming right up to the correction where now it's not a trend anymore. It is not the electric vehicle trend with Tesla, Nikola, Hyliion, NIO. It is equally not a trend like what is going in the biotech industry, Pfizer, Moderna, Johnson & Johnson. It's not also a trend like what is going on with the airline or cruises picking up, American Airlines, Air Canada, British Airways. Nothing like that. AMC, Blackberry, what is happening is that it's kind of a revolution. When I say a revolution, what do I mean? Retail investors like you and me, we are trying to rally up against hedge fund managers. We're going to see who's going to win. I mean, as a matter of fact, it happened with GameStop, and what? The retail investors won. It was kind of a knockout. Retail investors won. That's why GameStop is right up there. Will AMC and Blackberry go right up there? That's what we're going to talk about today. So what happened? Retail investors, they buy a particular stock. This is a meme stock. They hold it for some time. It's kind of risky. You need to know how to play the game. That's why I'm investing with Questrade or Interactive Broker. They have risk management tools like stop loss or trailing stop, which means if you want to dare or you want to get into these meme stocks, you pretty much have to know what you're doing. It's very risky and very volatile. You can make a lot of money and you can lose a lot of money. How do you avoid or mitigate losing money? That's when you know how to apply those tools. Trailing loss, try to use the stop loss. So Questrade gives you all that feature. You have stop loss, you have trailing stop loss. Right now, Questrade is running a positive campaign. They give you $50 of free stocks when you open an account. Doesn't matter if it's a retirement account, a trading account, a mutual fund, you get $50 of free trade. I'm also trading with Interactive brokers. I love Interactive because they are international. You're in the UK, Australia, Canada, US, you can use Interactive. So what I'll do, I'm going to drop the link in the description below. If you're new to the stock market, you want to open an account, consider number 1, Questrade, number 2, Interactive. Click on the link, you can open your account and start making cool money. Remember, historically, July, August, September are the best 3 months to make the maximum return in the stock market. So if you want to make money, you got to get some good growth stocks now. I mean now, June. Get your stocks. As it moves to July, it starts picking up. And if you want to sell, you sell around September and you make some cool money. Or 2x, like double your money. That's what we do. So now, let's check what happened last week. We have Wednesday, Thursday. We also have Tuesday, AMC hyped up, Blackberry equally. By Friday, they were coming down. So let's head over to CNBC website and see what happened. Let's go. To know and understand which stock to buy, which is fundamental analysis, to also know when to sell the stock, which is technical analysis, plus one-on-one phone call with me and a portfolio update, join my Patreon group, link in the description below. Yes, so right now I'm in front of CNBC. So as you can see, the stock market, making the biggest move in the pre-market. That's when AMC and Blackberry were moving up. Retail investors were buying, holding. And guess what? It was hyping up the price. When we go to technical analysis, we'll see why when people buy more stocks, it moves up the Bollinger Band. The buying power overshadows the selling power. The prices goes up. So let's take a quick look what happened. At one point, we had AMC pumping more shares, in the market. AMC Entertainment filed to sell up to 11 million common shares. So they keep pumping more shares in the market. Again, this is very risky. They're trying to dilute it, dilution, but let's see. Let's go down. But what we want to talk on right now is what exactly are meme stocks. So meme stocks, again, let's look at the quick definition of meme stocks. So you see a band of ordinary investors who are using social media to drive interest in a company's share. So me and you, or anyone buying and holding a particular shares, the more we buy, the more it drives up the price. Nothing special about it. It's just a team effort. You can see here we have GameStop, AMC are the 2 notable examples of, when it comes to meme stocks. And then you can also see here now, but there have been others that have also enjoyed some modest interest, such as Bed Bath and Beyond, and currently Blackberry. And when we talk about social media driving up these prices of the shares, the most important or prominent social media when it comes to this meme stock analogy is the Reddit groups, and that's Wall Street. We're going to take a look at them. Wall Street bets, those are the guys who are driving up these prices. The next, we're going to talk about what exactly is short squeeze. Very important. Let's take a look. Let's take a look here. So, a sudden acceleration of stock price rise as short sellers bail out to cut their losses. So you have the hedge fund managers, the guys who are buying those stocks, and sometimes they want to sell it so fast or buy it today, sell it tomorrow to cut their loss or make quick profit. So both the short sellers and the investors are making risky moves. The wise investors has additional reason for shorting or buying that stock. So again, you have to be knowledgeable, get some risk management tool. I mentioned stop loss, trailing stop, very important. But let me just give you a technical example of what short squeeze is all about. Take for example, hedge funds XY. They now say, okay, let's use Blackberry for an example. Okay, so now they arrange with a broker. They arrange with a broker on a contract to buy some shares of Blackberry at the price of $10 a share. So they might negotiate with a purchase order. Remember, a purchase order doesn't necessarily mean you have to pay the cash. You just make that arrangement, you have a purchase order. So now they have a contract that they are buying for $10 each. Now what do? They come back now, they create some stories on social media, in the news, to try to drive down the share price. If they are successful, what happens is that they will influence the market and the prices will go down. Take for example, if the price drops from $10 to $2, and retail investors like you and me, we are panicking that, oh, the market is crashing, there's a correction. We're going to sell back our shares. And guess what? The hedge fund managers will pick up all these shares now and then do what? Give it back to the brokers that this is the stock that you gave me a purchase order for $10. Now they are giving back these stocks for what? $2. So what is the difference between 2 and 10? $8. So they make $8 profit for just that one share. Just imagine if they bought 10,000, 20,000, or even 100,000. That's a lot of money. That's million. So that exactly is how short squeeze operate. Hedge funds want to take advantage of the market to make quick cash. So we talked about the Reddit group. Here are the people who are teaming up. When we talk about investors, retailers like you and me teaming up, we might be the small part, but there is a group which is specialized to fight against hedge fund managers, and that's the Wall Street Bets. This particular group in Reddit, they have 10 million members, and the members are loyal. When they say they're going to buy and hold, that's exactly what they are doing. They are buying and holding. So in the case where I just gave an example, the hedge fund manager bought Blackberry with a purchase order of $10 each. When this hedge fund manager comes back to influence the market by creating scene to drive down the price, guess what? Retail investors do not sell. They hold those shares tight. And because they are not selling, guess what? There is no shares to buy. So hedge fund managers are now stuck with the $10. As a matter of fact, as time goes on, they pay interest if they are not giving back those shares or buying it completely with like a sales order acknowledgement. So that exactly is what is happening. So thumbs up for the Wall Street. They are the ones who are keeping, they are like the watchdog for retail investors. If they see something not happening, hedge funds are trying to short a particular stock, they might team up and rally against them. So that's what short squeeze is all about. So now we're going to head over. Let's do some technical analysis, look some chart, and see what exactly happened. Let's go. To learn how to invest in the stock market like a pro, I mean like a real pro, enroll to my online course today, which is called Growing Well with Stocks. The link is in the description below. Front of, my platform here. Let's take a look what happened with AMC. And again, you might look at the graph. It might look a little bit complicated, but if you just hover around, it tells you what happened. So if you look at it closely here, on Tuesday, which is 1st of June, it was still sitting down on $31. And then it hyped up to 69, almost $70. $69, that's when, on the 2nd of June, which was on Wednesday. And then it dropped down. And that's Thursday the 3rd. And then it went back up to 67, which again, that was still on Thursday. Just imagine how volatile it was for just one day. And then finally, it now came back down and settled on 47, 48. Will it go back up? That's the big question. Again, very volatile. It's a meme stock. If you want to go in, know how to play the game, know how to play the game. Now let's head over to Blackberry. Similar, it's also a meme stock. And it's doing pretty much the same thing. When you look at it carefully, on Tuesday, June 1st, it was sitting down at $11. And then it hyped up to $20.04. And that was what? Same, Thursday. So you look, these stocks move hand in hand. They follow the same momentum, the same volume. Then it dropped down. That same Thursday, a lot of activities took place on Thursday, a lot of squeezing. And now it's settling down on $13.86. So what's my take? If you know how to play the game, you can get into meme stock. I always advise you use your risk management tool. Only avoid, only use money that you can afford to lose, or better still, money that you don't want to use it, tomorrow or a week's time or 2 months' time. Give it a period of time. Invest money that you might need it in 3 months or 6 months. Don't invest money that you want to use tomorrow. Get your emergency fund. You never lose money in the stock market if you don't sell. That's principle number 1. Don't lose money. Number 1 principle as well. Which brings us to the end of this video. If you like what I just gave you, give me thumbs up. Subscribe to the channel, and I will see you on the next video. Have a nice day. Bye-bye now.